What's happening, everybody? Yes, sir. Coming at you with this week's Stocks to Watch. I've been working on this thing all day long. We're going to go through a few different things here. We're going to go through the state of the markets, which are not looking all that fantastic. And there are quite a few stocks that I am currently involved in, that I have some small positions in that I'd like to add. And a lot of stocks that are looking like they're at areas where, you know, they're going to test some support and we could lose some support. I want to emphasize very quickly here that anything I'm looking to add to, I'm not going to be extremely aggressive unless it's stock specific and I think it's getting to levels that warrant me to get a little aggressive, okay? But for the most part, I think maybe, and look, I'm crossing my fingers here. I want us to have a nice pullback, right? I want us to have a good flush. I want some fear in the marketplace and let that create some opportunities for us. So, had a fantastic week last week. I know that some of you took profits in Verb, which turned out to be a great sell because now we're back below $3. There were a couple of stocks that I did add to. One of those was DUOT. We'll go over that in a minute. That got hit pretty hard on Friday, and I actually anticipate it could get hit harder. Okay, am I going to sell? No. Am I going to look to add and build to that position? I will, and we'll talk about the potential levels. I already put actually a limit buy-in on DUOT for I think $6.50 a share, but we'll take a look at that in a minute. RBBN is one that I've been holding for a while. I already sold and locked some profit on this one, and I think I have some lotto shares left. Coming back, testing the 200-day moving average. This is a perfect example of what I'm talking about here with, testing areas of support. This one here could potentially pull back and test this 640 area down to $6, somewhere in that area. And if ribbon hits that level, I could be looking to add back to the position. I'm sitting very well on cash right now. I had a decent sized cash position on the sidelines to begin with, and now, with Verb taking some off the table with Verb, I've got a better cash position. So, but I'm not in a big hurry because it does feel to me like maybe we could get the correction that we've been waiting for the last 4 years, right? All right, so let's take a look real quick at. We've got earnings, right? We've got the earnings calendar for next week, and we've got some big names reporting. We've got Tractor Supply Company. We've got Procter and Gamble, IBM. Who else do we have here? We've got Netflix and Halliburton. Oil. I noticed oil was pulling back. The energy names got hit pretty good. We'll see if that continues. The big fear right now is inflation, right? But if oil comes down swiftly, right? And this is where I go back to the fact that maybe this inflation that we're experiencing won't be as long lasting as everyone seems to be pointing to right now. But we'll see how it plays out. I mean, the supply chain issues that created a problem, right? For pricing, and then you had gas going through the roof because of oil. But if that all starts to turn around, if we work through those supply chain issues, and if oil comes down, then I think those inflation indicators start to tick down. But we'll see. I think we're also going to get, because of technology, I think we get more efficient, and I don't know. We'll see how it plays out, but. A lot of different names reporting this week. We've got Johnson & Johnson. We've got Texas Instruments. We've got Las Vegas Sands. We've got a railroad reporting. We've got Verizon, Coca-Cola. Let's see who else. We've got Twitter and Snap and American Express and Intel and Southwest Airlines, right? So a good broad array of companies reporting. Let's see how the market reacts. We'll go ahead and go through the different sectors right now and see what those charts are kind of telling us. Let me go back to the first page here. I'm on the second page. Let me go over to the first page. Okay, so gold had a little bit of a bounce, right? And that makes sense. Markets got a little bit weak and had a little bit of a bounce coming up to the underside of the 200-day moving average and also the 50-day moving average. Now, you did get a golden cross, which I think is kind of interesting, where we had the 50-day cross above the 200-day, right? So that is a bullish indicator. And if, gold is going to go on some kind of a rip-roaring run, probably not a good thing for the overall markets, but we'll see how this plays out. IBB, the biotech industry, actually held up fairly well. It pulled back, tested the 50-day moving average and bounced off of there, but it did still put in a lower high. So, unless we can get back up and take out that previous high, we're going to have a challenging time there in the IBB. IWM, Duke was mentioning this on Friday, that it looks like a, topping out, rolling over pattern. Right now it's in consolidation mode, right? And I think, if we lose the 200 or the 210 mark, we're probably going to come down. We're going to test this 200-day moving average. And actually my chair is kind of in the way here. Let me move that over. All right. So we're going to have, come on, man. No, Jim, we don't want to become a member of the street. Matter of fact, I just want to get out of this little screen that you have here. Okay. So 210 is what I'm looking at for a level of potential support. And then we've got this 200-day moving average right around 205 or so. We lose the 200-day, problematic for the IWM, for the small caps, right? And right now, during this, during earnings season, not a lot of people focusing on small caps because you've got so many large caps that are going to be reporting. So small and mid caps don't start reporting typically until later in the earnings season, probably a couple, 3 weeks from now. So it'll be interesting to see what happens. But there, if we do lose this area of support and we do lose the 200-day moving average, we could see some flush activity going on. Now we're going to take a look at the T2106 and the T2107 and the T2108, because as you know, those indicators they play a big role for me in when things are getting overdone to the downside, overdone to the upside. So let's take a look at this next. Let me go back here. Let me go back to the other charts, other sectors. Okay, so we've got IYT transportation, not looking good, right? We're losing the trend line of the, we're losing this long-term trend line. We actually closed below that trend line. Hold on 1 second. Hello? Hey, I'm doing my video. Okay. Love you, bye. Okay, so where was I? IYT Transportation Index. We are losing that trend line. We are below the 50-day moving average. Where do we have some potential price support? We've got some down here in around the 240 area. We'll see how this plays out, but losing this trend line, not necessarily a great thing. but we'll see what happens next week. Let's see, JNUG and Nugget. Now, I thought this was kind of interesting because you had gold, which had a nice move. Now these are the the 2-time levered and 3-time levered ETFs for gold and the miners, and they actually kind of not looking too great here. Nugget is looking like a bear flag over here and sitting on this little trend line, see if it can hold it as support. And then JNUG is, coming down. Maybe you get a potential double bottom test here, but they're not looking all that great. QQQs, we did break through, put in some new highs. We're pulling back now. Maybe we test the top of this trend line and see if that can hold the support. If it does not, then maybe we're going to test the 50-day moving average. We'll see how it acts there. Come over here to the semiconductors, and actually we've already broke through the 50-day moving average, and it looks like we closed below there. So semis could wind up seeing some weakness. Multiple top here, right? I didn't put that line there. That's from FinViz, but it is multiple top formation. We'll see what happens. Then, the big area of potential support would be down here right around 230, also where the 200-day happens to be. S&P 500 put in a new high and pulling back there. Looks like we could potentially come down, test this trend line, test the 50-day moving average. If we wind up losing the 50-day, that would be problematic. We do have, we had a breach down here of the 50-day. It didn't stay there very long. And then the same thing over here. We had a pretty good break below the 50-day. And then we had a nice little snapback. Keep this in mind too. We're coming up to, probably the worst months for the stock market, right? August, September, October, typically weak months for the market. Doesn't mean we won't be able to find opportunities to go long in some particular stocks. It just means that, the overall market may struggle a bit. We'll see how it plays out. Every time I think we are at that place where we're going to be pulling back and getting a nice good flush, every single time they have come in and they have defended the markets, and they have, the buyers start stepping in. So will this time be different? I don't know. I would really like to see some fear in the market. I would like to see some flushes, because a lot of people that are trading now have never even experienced what it's like to be in a bear market. And, when fear is rampant, that is when you get some amazing opportunities. So I think the one thing that I would suggest to you is, if you go through your portfolio and you have profits, if you're sitting on profits, lock some in. I'm not telling you to sell it all. You don't have to sell it all, but lock some of your profits in. You do two things. You give yourself a nice, you've got some powder dry to be able to take advantage if we do get a big flush. If, there's nothing worse than having all your capital deployed and not be able to take advantage of the opportunity of these stocks being at price levels that probably are going to get overdone. So keep that in mind. If you have profits, there's nothing wrong with locking in the profits. Let me go through the rest of these real quick, and then we'll head over to, I actually didn't type in the list of stocks to watch this time. I will, but it was getting too late. I wanted to make sure I got this video out. So aerospace and defense, which has, actually had a pretty nice run as of late, actually coming back, testing this trend line, just cracked and closed below the 50-day moving average. Next area of potential support could be the 200-day moving average, somewhere around 115 or so. We'll see what happens with aerospace and defense. There are a couple of names that I like within that sector. Maxar and Kratos are two of the names. And if they get to attractive levels, I'll probably want to start dipping my toe. Home builders also below the 50-day moving average, and we're we kind of got a head and shoulders pattern developing here, which would be a bearish pattern if we break this neckline to the downside. Could, come down and test the 200-day moving average. This is a very ugly chart. This is building materials, and lumber has pulled back recently, right? Which is another interesting thing for that whole inflation thing, right? So we've got a bear flag here below the 50-day moving average. That is not a very attractive looking setup there. We'll see what happens, but we may be on our way back to test the 200-day moving average there. XLE, now this is what I was talking about, the energy names. Oil had a little bit of a pullback. That was on the first page. Let me go over there real quick. Just take a look at USO. So, here's oil, right? Not all that dramatic of a pull, but if you look at these oil-related names, the energy names, the oil and exploration guys, they had a pretty swift pullback, right? So if oil continues to pull, if we get a break below the 50-day moving average, you're likely going to see more aggressive pulls in the oil and exploration names. So I thought it was pretty interesting that the action was so poor on a very slight pullback of the commodity itself, right? So XLE, pretty big pull. We are below the 50-day moving average, and it is looking like we want to come down and test the 200-day. We'll see how it acts there. Financials, right, below the 50-day moving average, kind of little bit of a bear flag there, kind of a head and shoulders pattern there as well. We'll see how it plays out next week. XLI Industrials, not a super great looking setup there either, right? We're trying to maintain the 50-day moving average. We did have a double top recently, right? And this is kind of a bear flag. We'll see what happens next week, but industrials not looking all that fantastic. Consumer staples, on the other hand, getting a little pop. Now, PP&G, is it PP&G? Procter & Gamble? No, that's not PP&G. PP&G is something else, actually. We do have a couple of consumer staple names reporting next week. We'll see what happens, see how that impacts the sector. But, typically consumer staples considered to be, when those get hot, those are a safety trade, right, for a weakening economy. We'll see what happens, but did manage to get back above the 50-day moving average, and now we're coming up to an area of price resistance, and it looks like we want to maybe go up and test all-time highs. XLV Healthcare actually looks fairly decent as it's consolidating after this nice little run. Consumer discretionary pulling back. Looks like maybe we want to come back down and test this 50-day moving average, which wouldn't be all that bad. Actually, this pattern looks pretty decent. We just made a new high. We come back, we take this, we test this, and maybe bounce off there. That could be a space to keep an eye on. XOP, this is the oil exploration, looking very similar to XLE. And XRT retail, surprisingly, is holding up fairly well, right? Not my favorite sector. I usually rarely ever trade anything in retail. Not one of my favorite sectors, but I have to admit that it is holding up fairly well. Okay? All right, so that's where we're at with the overall sectors. And then let's go ahead and take a look real quick at the T2106. What this is, for those of you that are new or unfamiliar, this is the McClellan oscillator. And what it is it kind of is a measure of fear within the marketplace. And this is it's at like negative 129 right now, and there's some fear, right? That's not extreme fear. When we get to extreme fear, we can get down to like negative 289. You see, this is back in what? That was early 2020. We got to like negative 289, right? There was some real fear out there in the marketplace. But look at what happened after that really low, or that really fevered pitch fear, right? You had this massive snapback within the markets and in a massive run. And that's really what I want to see, right? I want to see us have these extreme fear moments. That's 2019. Let me go to the weekly here. So look back at, 2008, 2009. We got down to negative 472 in 2010, right? I mean, so these things can get really stretched. We're nowhere close to extreme fear, is I guess the thing I want everybody to be aware of, right? T2107 and T2108. So let me go back to the daily on this. So, before I go to the daily for reference, right? So for the new people, when we get below on this T2107, when we get below 20, okay, that is an indication that maybe things are getting a little overdone to the downside, okay? Maybe there's a little too much fear, a little too much panic. 20 and below is an indicator that maybe it's time to start, dipping your toe. I'm not suggesting it's a time to go all in. It's a time to start dipping your toe, okay? Literally back in 2009, we got down to a 1.25 reading. And we did that again here in the early 2020, right? We got down to the single digits. And look at what happens each time you get down to those extremes. You have these massive snapback runs, okay? So where are we currently sitting? And, what is the T2107 for those of you that do not know? Hold on a second. So T2107 is the amount of stocks that are above their 200-day moving average, right? So when you get to 70% of stocks in the trading in the market and being over their 200-day moving average, 70%, that is an extreme indicator, right? Most of those companies probably do not deserve to be trading over their 200-day moving average. So as you can see right here, we are at 56, right? So that is not even remotely close to being oversold or extreme, right? We're not even remotely close to that. Remember, I said 20 or less, and we can go down to single digits. So T2108, we are sitting at about, we just cracked into the 29 area. So if we can break below, if we can get into the 20s on the T2108, now that's the amount of stocks that are over their 40-day moving average, okay? So both of these indicators I pay a lot of attention to, because when we get to those single-digit areas, that's when I start to feel more comfortable about maybe getting a little more aggressive and adding to positions and stuff like that. Okay? All right. Gotta see if I can pause this for a moment, because I do want to put my little list together here. I'm going to stop recording this for right now. Hold on a second here. All right, I might put 2 videos out. I might just come back and do the other list of stocks to watch in a minute, but let me see how this works.